Kamala Harris's tax plan discussed. Day 144 of the billionaire journey. It's only fair that we talk about Kamala Harris's tax plan. As I read Project 2025 for Trump back in July. Check out the page in regards to that. But on Tax Savvy Tuesday in the billionaire journey, it's only fair to get clarity and understanding of what Kamala Harris has in regards to the tax plans for 2024. The presidential election is right around the corner. October 1st, 2024, next month, the decision is going to be made in regards to who's going to be the next president of the United States of America. And the great thing about this opportunity is we're going to dive deep into Kamala Harris's tax plans, understand what they are and proposals, so that way, when you go to the actual polls, you're ready to make your impact of wealth and entrepreneurship, as well as with digital real estate, kindness and knowledge, and understanding what you're getting, what's going on in regards to clarity of the next steps. So that's what we're going to go over here in this video, highlighting these implications and understanding each and every proposal. So looking at the major idea of the proposal, let's focus on the 5 different proposals that she has provided. And we're going to take a look at it and kind of break it down. And in the comments as well below, leave any comments that you have in regards to the changes and understanding that you may have, or lack of understanding of Kamala Harris's opportunities. So proposal 1, taxing unrealized capital gains. So why this is even important and why taxes on unrealized gains is even a concept, you want to understand that with the presidential election fast approaching, analyzing the different plans and the proposals and understanding how this policy is going to affect you, the candidate's plan is literally going to be able to understand if you want to go with Donald Trump or if you want to go with Kamala Harris, to have the fiscal policy as well as taxation to be able to form in regards to what your goals are. So we want to be able to understand what this whole idea with capital gains is going to be. So with proposal 1, the proposal to tax unrealized gains for family with net worth over $100 million, for example, if you bought a stock at $200, right, and it rises to $300, you would have a $100 unrealized gain. So even if you haven't sold the stock as of yet. So here's this plan would tax those gains before they're realized. So why taxes on unrealized gains is something to actually discuss, because again, this taxes only targets the ultra wealthy, and it's concerning because the tax policies that way start to expand to broader populations. So right now it's actually staged for those over $100 million and in regards to, but it can actually change at any moment. So taxing hypothetical profits, even at a value later decline, additionally, the money and the mention of unrealized capital losses, it doesn't seem fair in regards to one, in regards to another. So having those, what are unrealized capital gains? They represent that exist on paper when an asset such as stocks has increased in value, but has not been sold as of yet. So taxing these gains would mean families with substantial assets, like I said, would owe taxes on potential profits they haven't even gotten through sales as of yet. So like the example I just shared with you, consider a stock worth $10 million. And they appreciate from $200 to $300 per share. So the proposed tax will require payment on $1 million of gain before the stock sale even created that tax liability without cash flow, which would, yes, they have the money, but to provide that in taxes, is that even fair? So that's the main concern about that proposal, because you're having a hypothetical tax that even happens before the loss in the asset value occurs. So like I said, right now it's actually formulated for the higher class, but it could lead to taxing the middle class families and individuals with other assets that would lead to more problems than solutions. So again, then we go to proposal 2, raising the corporate tax rate. So Kamala Harris wants to raise the corporate tax rate from 21% to 28%. So this is a significant increase compared to Donald Trump's stance on maintaining the lower corporate tax rate. But Kamala Harris argues that the higher tax rate would help the national deficit, but a lot of people or naysayers worry it may discourage businesses from expanding or innovation, with actually raising this actual corporate tax rate. So with the current tax rate being at 21% and increasing it to 28%, then the government revenue and address of the national deficit, it literally is a strategy to try to reduce that amount. So an example on how that would impact small businesses. For small businesses earning $1 million in profit, the increase in the corporate tax rate from 21 to 28% will have you raise from your liability from 210,000 to 280,000. So that's 70,000 additional in taxes that can hinder the business growth, not to be able to allow to employ other individuals, and not to lack for expansion into other projects as well. So it's a pros and a cons, and of course you have an argument in regards to that, but that can lead to layoffs, that can lead to infrastructure problems, and lead to lack of innovation in starts, because again, having to pay more in taxes is taking away from the business's bottom line. So proposal number 3, we're going to look at no taxes on tips. So Donald Trump and Kamala Harris agree on this point, so supporting eliminating taxes on tips. So this will benefit those that are in the hospitality business, the bartenders, hair salons, beauticians, barbers, servers, allowing them to keep 100% of their earned tips without any type of tax deduction. So that it still will have to go through and get the bill passed, but that's the whole precedent of that actual bill. So, they'll be able to return their entire earnings, being able to uplift these workers that start at a lower base wage. And that way they'll be able to have significant tip income to provide them that financial relief at the end of the day. So proposal 4, and proposal 4 is raising capital gains taxes. So capital gains taxes is actually going from 20% to 28% on the Kamala Harris tax plan discussion. So individuals earning over $1 million annually, this is who that would affect. So this increase from 20 to 28%, that would affect high income investors in stock, in real estate, in cryptocurrency. So these different individuals will actually be impacted by this idea. So for example, if a real estate investor was making $2 million profit, the tax owed would rise from $400,000 to $560,000 under Kamala Harris's plan. So this increase reflects an additional $160,000 in liability, emphasizing the impact on high income earners in real estate. So again, this is actually a less extreme than President Joe Biden's actual plan, that his earlier plan, which aimed for a 39.6% capital gains tax. So making a little bit change there. Okay, so in regards to proposal 5, expansion of the startup expenses deduction. So to encourage entrepreneurs, Kamala Harris is actually promoting and expanding the startup expense deduction from $5,000 to $50,000. So this would help new business owners manage the high costs of launching a new business, which averages around $40,000 to $50,000. So the understanding the alleviating of new businesses and being able to take some of the stress away by having this expansion and start out for more new businesses, that's what this deduction is actually catered to. So it would be great for entrepreneurs that are looking for this deduction limit, because they can actually recover a significant portion of their initial investments in that first year. So this allows for more cash flow, for more change. And that's the whole idea that Kamala Harris's tax plan focuses on raising the taxes for the wealthy and being able to have individuals and corporations also receive incentives and business workers in the service industry. So some policies like taxing the unrealized gains are controversial at the end of the day, but others like eliminating taxes on tips, helping out startups, helping out new organizations and entrepreneurs. This is going to actually be beneficial for those that are actually looking at who to vote for coming here next month. So what you have to do is make a choice. So Kamala Harris, and you have to do your due diligence. So following and understanding what Kamala Harris has in regards to her new way forward is allowing you to actually know if for small businesses and the growth opportunities that you have, I mean, which way do you think is best? And let me know in the comments, which way are you thinking about swaying your vote in regards to tax strategies versus the Kamala Harris strategy or the Donald Trump strategy. So I did read the Project 2025. And so understanding the extreme ability that Donald Trump is actually looking at in regards to his plan, And then we have Kamala Harris is taking a different approach in targeting the poor and middle class, but understanding too that it's a catch-22, honestly. So more information can be found also on kamalaharris.com. But would you support any of these proposals, like the 5 proposals that I went through? And as always, make a comment in here below and let me know, join the community in regards to growth. So on Tax Savvy Tuesdays, we talked about the 5 parts of the proposal. Proposal 1, taxing unrealized capital gains. Why taxes on unrealized capital gains is actually something of discussion one way or another. Proposal 2, raising the corporate tax. Proposal 3, no taxes on tips. Proposal 4, raising capital gains taxes. And Proposal 5, the expansion of the startup of businesses, deduction. So the bottom line is to pick one, right? You have to have your choice in regards to your freedoms and what you're looking to build. And hopefully in this video, you were able to get some insight and actually get some information in regards to helping you get your vote forward. So I'm looking forward to see who you're voting for here in the comments. I'm also looking for you to join the Random Acts of Kindness community. So that way you're able to build, grow, and actually expand with us as we build our billionaire brand. So as Rich Dad, Poor Dad, and check out the video from yesterday in regards to talking about mortgage mastery. You know, the rich people don't pay taxes because they know how to eliminate taxes. It's for the working class. So those that are actually paying taxes are those that are working, not in the entrepreneur angle or not as an investor angle. So actually having in their paycheck actually have those deductions. So those higher income earners, our doctors, our accountants, our lawyers, our entertainers, our professional athletes, these are the individuals that are actually impacted by these type of scenarios. But your entrepreneurs and investors, the thinking outside the box, that's what the benefit of being a part of the billionaires plan, with building billionaires, with digital real estate kindness and knowledge, and Adrian Mays, and what we're trying to do in regards to educating you for your growth opportunities in 2024. So looking forward to hearing from you. Tax Savvy Tuesday. Hopefully you're able to get some great information. Adrian Mays, day 144 of the billionaire journey. Being the change because we care. Your financial education matters. I can, I will, I must. Let's go. Deuces.